Hey there, it's Tom Ryan, founder and CEO of ICR. Before we get into the next episode, I wanted to ask that you subscribe to the show. It'll help us get even more unique and interesting guests on the podcast and in turn continue to educate management teams and the growing ecosystem that creates value for fast-growing private and public companies. And while you're at it, head over to Apple Podcasts and leave us a 5-star rating. Very much appreciated.
I do think that Ethereum is becoming that financial operating system for intelligent agents.
As if the world of crypto wasn't complicated enough, we now have companies working to combine decentralized finance like blockchain with the power of artificial intelligence.
AI brings the cognition and autonomy, and Ethereum brings the trust and identity and finality that we've talking about.
My name is Tom Ryan, and this is Welcome to the Arena, the ICR podcast. Each week, I sit down with today's business leaders to give you an inside scoop on some of America's most prosperous public companies, their origins, their challenges, and the keys to their success. Welcome to part 2 of my conversation with Maja Vujinovic, the CEO of FG Nexus and a pioneering thought leader in the digital asset space. The first part of our conversation came out last week, and you might want to go back and give it a listen, especially if you're not that familiar with the world of crypto and blockchain technology. Today, Maja and I talk about regulation, the different levers for value creation in the blockchain space, and the potential role for AI in the sector. Without further ado, let's go back into the arena with Maja Vujinovic. I wanted to ask you, just like at a basic level, how does ETH generate yield for investors? Just so people I think most people don't know what staking is or, how you get yield on that. How does that actually work?
So I think one thing maybe to distinguish also for folks is Bitcoin is a digital gold, right? It's kind of a standalone crypto. I always say Bitcoin is a king, right? In many ways. I came into crypto because of Bitcoin and I'm staying because of programmable money such as Ethereum and because of Bitcoin, right? Because I see the future changing, Tom. I see the programmable finance kind of taking over. So that's Bitcoin on one side. On the other side, ETH is, as I said, programmable money and it's a yield-bearing asset, right?
Yep.
It earns native yield through staking. And staking is essentially you pledge your Ethereum to secure the network and you receive rewards. Okay. And those rewards are 3 to 5%. So they can vary 2.8 to 5.2. Okay, percent annually, depending on the activity and et cetera, and what's happening, right? And the yield comes from validating those transactions, not from kind of leverage or third parties. It comes from you directly participating on those nodes that we talked about. So that's kind of how that works in the simplest terms. And by the way, when we raised $200 million, we went and we bought ETH directly and we are staking all of our ETH and we're earning yield on it at the moment.
Yeah, which is exciting. And you can go for a higher yield. Am I wrong about that? But it's more risky to do that. So I would imagine as a management team, you're looking at all your options to create value, as we said, and probably going into a zone that you feel comfortable with the risk reward setup of that, right?
Yeah, so absolutely. You have places, I'm an investor also in EtherFi, and there are places like Eigenlayer and Lido and all kinds of different things in DeFi. And DeFi, by the way, is decentralized finance. And you're absolutely right. You can go out there and get 10 to 12%. Right? But again, higher you go, the riskier it is. Okay. So think of it like any basically treasury management. The goal is to optimize the yield while managing the risk, particularly because this is still unproven and because a lot of the higher yield comes from DeFi that has massive hacking risks. But yes, Ethereum, like today for my own assets, right? Let's say we are, close friends and I tell you, hey, look, deploy it in this pool, right? You'll get 10%. Don't keep it there longer than 3 months, right? You've got to pay attention and the risk is, 50%, right? But Ethereum does allow you to do that on chain. You can do it transparently. You can do it programmatically. Some strategies, I think like staking, offer a base layer of yield as I've said earlier, with relatively low risk because it supports the network security, right? But others like restaking or the DeFi participation, that's where you're going into that high return, but you have to do a very strong due diligence. You have to have diversified partners, trusted partners, like, gold standard, strong custodian safeguards. So for us, right now, the most important thing is to stake it safely, to keep generating the yield, to keep buying ETH. And now, as I said, we are exploring different ways where we can add a percentage or two on top of that. That is really safe.
Yeah. How do you see institutional adoption evolving, particularly with the regulatory environment coming together in a positive way? I know it's not perfect yet, which we'll talk about, but how do you see institutional adoption now, and how do you see it over the next few years?
Yeah, it's a question that's on everybody's mind because particularly like tokenization or DeFi, it doesn't have that clarity now. We hope that with this Clarity Act and market structure bill that's going to come out, that is going to really, mark my words. I think, I'm happy to predict on your podcast live, as they say, screenshot this. But I think once that's clear, you're going to have a lot of people come out of woodworks to be playing in this space. What's interesting now is we're almost in this no man's land, kind of wild, wild west, because with Gensler, even if you played within the rules, you were kind of, risking going to jail. Now you can just do whatever. And we're in a black hole at the moment, right? The government has said, hey, here's Genius Act. We're going to bring you Clarity Act and market structure bill, but play until then, right? Make money until then. And then once those come, I think we're going to have guidelines and that's going to help. And then people are going to know what to do and how to do and where they can push the boundaries. But also if you break them, right, that's going to be really clear. So you're going to have a very interesting, I think, playground in the next 6 months to a year. I think the Clarity Act could probably come even by end of this year. I think, even though that remains a bottleneck, I still think we need these harmonized global rules as well, because blockchain is meant to be global. You need kind of these standardized on-chain reporting. You need the seamless bank connectivity. We don't have that. And the good news is if you double click on some of these things that large institutions are building, they are building it. They're building, custody is regulated already. Accounting standards are closely catching up. The tokenization frameworks, are forming. I mean, you saw what BlackRock said the other day, Larry Fink, everything will be tokenized. And he can't wait to do that because imagine he's got trillions of assets that he wants to put in a global hands, right? And so plumbing is coming. I just think that we need some clarity where to play.
A global regulatory framework for crypto is probably a pipe dream. Instead, what we're likely to see is different countries coming up with their own regulatory regimes and the crypto space having to navigate a patchwork of regional laws. I wanted to know from Maja how that sort of scenario could impact geopolitics.
What your question really gets to is that it shows to everybody that what I saw in the beginning, right? What I saw is blockchain is not just the technology, right? It's becoming this geopolitical infrastructure in the same way that these shipping routes, or internet once shaped the global power public blockchains like Ethereum particularly are creating these new neutral rails. Now, again, I mentioned we've seen Google launch their blockchain, Stripe launch their blockchain, right? JP Morgan has their own, but they will all need somewhere to interoperate between each other, right? And to settle on natural rails. And I think that Ethereum stands a really good chance of being that winner for finance, for data, and even for AI. So when you have something like that globally, you're allowing countries and corporations and individuals to transact and collaborate without relying, on a single government or some kind of an institution to mediate that trust, right? You and I right now rely on a bank to do that, right? Where our businesses in the future don't have to do that. They can just rely on the rails on which we decide to use that. So I think this is extremely powerful. I do think, to your point, it's also challenging because look, at Japan the other day, they woke up and they said, hold on a second, we're launching a stablecoin that's backed by yen because we don't want the stablecoin that has dollars in it, right? And so nations are realizing that control over these digital assets is influence. And so we are kind of entering this era where the open and the global systems will compete with these closed and nationalized ones, right? You will have countries like China or similar that will be full on surveillance. And by the way, in the West and many Western countries, we already have surveillance. We just don't like to say we do because we like to think we're democracies and, nobody wants to use me as an individual. But reality is that we are all walking into the systems. And this is why I think also currencies like Monero and Zcash, which I'm an investor in, become really important, right? And so I think that these regulatory frameworks won't necessarily be unified, Tom, and they'll probably be fragmented. But again, the deeper I look at, I think to myself, the underlying protocols can still connect those worlds. And that is where I see Ethereum play a role.
Interesting. I have to sneak in an AI question. Obviously, it's on everybody's minds, but what's the interplay between Ethereum and other blockchains and AI? Because I think there's going to be some amazing things happening. And I was talking to a buddy of mine who's kind of in the crypto business, and he's saying, you're going to plan a trip and, an AI agent is going to be able to, pay for it on your behalf and set the whole thing up. Like, I don't even know what I'm talking about, but like just some otherworldly stuff for people used to doing things in a traditional sense. How does AI and Ethereum play out in other blockchains?
In general, I think we're soon enough, probably in the next 5 years, we're going to be living at scale to some extent. We're going to be fully living in digital intelligence and digital kind of assets world.
Yep.
I know that sounds scary. I mean, the head of Google DeepMind predicts that we will have AGI in 5 years. I don't know about that. I'm not an expert in AI, but I can tell you that we'll have it at scale, a lot of these things. So in AI and Ethereum, it really is more about creating where kind of these intelligent agents that you talked about can act economically on your behalf. Right? So imagine, as you said, that AI assistant that doesn't just research me best restaurants and hotels or whatever, but it really plans out the whole trip, books a flight, pays for hotel, verifies the, certain things all on chain without any middleman. You don't need Expedia anymore. You don't need any of that. Okay. But for that to work, these agents need somewhere where they can send, receive, and validate the value globally, somewhere where it's really trusted, right? And that's, I think, where, again, from what I've seen, Ethereum provides that because it is that programmable money. It's the smart contracts. It's the open ledger, that anyone or any AI can really interact securely. So I do see, and I've launched the first kind of pilots in AI agents on IoT devices in GE in 2017, and I saw that potential. That was really one of my first use cases where I thought if humans never use crypto and blockchain, AI is going to use it for sure because AI is going to be faster than us and it needs a faster highway than what we have today. You can't have an AI world and have data that's fragmented on a bunch of different assets and take that data and pull it into a dirty pools of data that companies have right now. You need to compute that at the edge. And in order to compute that in the edge, you communicate to a customer, right? This is where blockchain and those smart contracts come together. So I do think that Ethereum is becoming that financial operating system for intelligent agents, and AI brings the cognition and autonomy, and Ethereum brings the trust and identity and finality that we've talking about.
Yeah. Did you have someone in the industry that you really admired that kind of had an influence on you?
I do admire a lot of people. I admire Brian Armstrong for his resiliency and pushing what he did. I admire CZ at Binance. I admire Joe Lubin for his resiliency and a push for so many years of what he's done with consensus. So there are many people I admire like that, that are specifically kind of focused long-term, that are still in the game, that are wanting to impact the world in a different way.
Yeah. What is it like being the most knowledgeable person in every room on crypto? Is it great? Do you dread it, or does it depend?
I'm not the most knowledgeable person, Tom.
But
in
most rooms that you walk into, let's just assume that you know more than most people.
Yeah.
Or is it like, oh, I don't want to talk about this again, or is it exciting, or do you like to spread the gospel of all this stuff?
It's exciting to teach people potential of this and to show them that now with their assets they can do this, or with their company they can do this. They should be thinking about this and open their eyes. It's amazing. Stablecoins are amazing. They're literally a lot of places in the world doing God's work. They're keeping people fed because the instability of their own local currency. But I am always humbled every time when people ask me what is a blockchain, like you did. And so I'm always humbled. I'm like, oh my God, how do I explain that? Even though it's just so natural, but you're always kind of humbled with the deep knowledge. And no, I never think about that. If anything, I just want to surround myself with people that are 50,000 times more smarter.
No kidding. Well, my last question, Maja, and this kind of comes back to really the point of the podcast, talking about FGNX. There's a lot of DATs out there. Why do you feel that you have something kind of unique and differentiated, and people, it would be to their benefit to look, at this as an investment? Why do you think it's different, and why do you think it's compelling?
Yeah, look, simple way we bridge public markets, investors who want kind of digital asset exposure and institutional governance. Okay. We give that transparent way of showing crypto has had for many years kind of these murky waters of what it is, how is it, is it shady? Think of FG Nexus as kind of a modern treasury department that operates on chain, acquires Ethereum, managing staking and yield, and partnering with custodians such as Anchorage and BitCo. Those are our custodians. We report transparently. We're a publicly traded company. And I think investors get a benefit of ETH growing for sure, but also of potential other income streams where we're trying to build this company and go forward, right? Without having to headache of managing a key or nodes or regulatory complexity of the space, which, by the way, again, is still going to take a while for the UX to be clear on particularly on management of keys and other things. And I think we provide them a very seamless way to invest and participate and learn with us. We also, on our website, FGNexus.io, put out an incredible alpha brief that is in-depth education around this. Yeah. And I would encourage everybody to kind of look at that. And I'll remind everybody that, Amazon wasn't built in a day. It was nothing and had no revenue for many years. And NVIDIA was nothing for many years until they hit a nail on the head. So
yes, and criticized all along the way. I remember Andy Grove at Intel sat with Jeff Bezos and is like, you're never going to make it. Your business model doesn't work. So exactly. Patience is key. And this will all play out over a couple of decades for sure. Thank you, Maja.
Thank you. Thank you so much.
That was Maja Vujinovic, the CEO of FG Nexus. She's got an amazing team with a ton of experience in both traditional and decentralized finance, or DeFi. When you combine those two areas of expertise, the sky's the limit, and they're only in the early innings. It'll be fascinating to watch as they execute on their plans to develop new avenues of value creation in the crypto space, particularly Ethereum, and as they work out new ways to incorporate AI into the business. I'm Tom Ryan, and we'll see you next time back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behavior. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.